Stone Street Bred and Raised has been included on the catalog page for many years because we're proud of what we do. And we created a partnership with Gluck Equine Research Facility at the University of Kentucky to take blood samples from our yearlings at intervals to show exactly what we don't put into our yearlings.
So there's actually going to be 3 samples available to any potential buyer so that they can look at more than a 6-month interval prior to when the horse was put up for sale.
I decided to invest in this project because I believe transparency in raising a racehorse is so important. I think it's good for the industry, for people to have confidence in our Kentucky raised thoroughbreds. And this is something that I hope everyone will follow because I think it's a good thing for the industry.
I'd like to welcome everyone to the 2021 Virtual Thoroughbred Owner Conference. My name is Gary Falter with the Jockey Club, and it's an honor to have you with us today. This is the 7th edition of the Owner Conference and the first time we've done this virtually. So a big thanks to you for attending today's conference. Today we'll have the first panel in a series of 10 panels that take place the first Tuesday of each month through December. Each panel will last about an hour, including Q&A at the end of each panel. And today's topic, as you know, is the economics of racehorse ownership. And please keep in mind, as the panel progresses, you can use the Q&A feature at the bottom of your Zoom screen to send us questions about the topics we covered. And we'll try our best to get to as many questions as we can. The hosts and the organizers of the Owner Conference Series are the Jockey Club and the Thoroughbred Owners and Breeders Association. And I would also like to recognize the sponsors, starting with our presenting sponsors, Bessemer Trust, Dean Dorton Equine, Stoll Keenan Ogden, and Stone Street Farm. The support of all the sponsors make it possible to offer this conference this year at no charge to you. So if you get a chance sometime this year, be sure to thank the sponsors for their support and dedication to advancing thoroughbred ownership. Enjoy today's panel, and we look forward to having you back next month when we talk about finding your thoroughbred athletes. Our moderator today is TV analyst Kaiten Radon. Thank you, Kaiten, for joining us, and please take it away.
Thank you, Gary, and thanks so much to Toba and the Jockey Club, and especially our panelists today. I am really privileged to be a part of this that I think will be sort of a record as far as the participation from so many who are joining us via Zoom to learn a little bit more about thoroughbred ownership. And I know the first of many really enlightening and exciting panels that we're going to have in store. I really want to thank everyone who's joining us on the panel, and I'd like to introduce our panelists very quickly. They don't need a big introduction, and I think as we go, you'll learn a lot more about them and about their many successes in thoroughbred racing, their experiences as well, but their willingness to share their experiences, I hope, will prove as beneficial to all of you as it has to me over the years in learning about what makes racing go and all that can go into a successful operation. Our successful thoroughbred owners, George Bolton and Maggie Moss, are joining us today, as well as Sarah Reeves, an attorney and member of Stoll Keenan Ogden, and Jen Shaw, tax director with Dean Dorton. Now, we can all agree that a lot has happened over the past year. The pandemic has affected our country like nothing else in modern times. We've experienced business disruptions, school closings, industry shutdowns, self-quarantine periods, things that are unprecedented for nearly everyone across the world. And as with most industries, the thoroughbred industry has not been immune to those hardships. Today, we're going to focus a lot of our attention on how the pandemic has affected owners in thoroughbred racing and the different economic aspects of ownership now and generally speaking. I think what you're going to find, though, is in hard times as well as better, the passion, the joy, the thrill of owning a thoroughbred is something that is evergreen. As Gary mentioned, you should be sure to send in your question and answers using the Q&A option on your Zoom screen. We'll have that portion of the program at the end. And if there's one good thing that's come from Zoom, it's the opportunity to give us a little bit more time to answer all those questions and really get into the depths of thoroughbred ownership. We are also, because we're relying so much on Zoom, are asking everyone to be patient and bear with us if there are any technical glitches along the way. But I know that we're going to have a great time. We're going to start with Jen Shaw, talking a little about, Jen, the multiple government stimulus programs that have helped businesses and individuals weather the effects of the pandemic. And if you could tell us a little about how those programs have benefited owners and others in the thoroughbred industry.
Sure, happy to. And thanks for having me again this year to talk about some of these important topics. I always say that accounting, tax, and even the government stimulus programs are sort of the less sexy topics, but in my biased opinion, some of them are more important. So from a high level perspective, for the stimulus plans that we had last year, the focus was to get cash in people's pockets as soon as possible. So we saw a couple of rounds of checks that were delivered to individuals below certain income thresholds, and the current bill that's not yet been passed into law includes a third round of checks if it is eventually passed into law. On the business side, from a tax perspective, for 2018 through 2020, net operating losses could be carried back 2 or 5 years, and originally beginning in 2018, those were only supposed to be carried forward. So the IRS actually accepted faxed refund claims in order to expedite refunds on those NOL carrybacks. And for non-corporate businesses, primarily individuals, the excess business loss limitation rules, which limited net business losses claimed to either roughly $250,000 or $500,000 if you filed a joint return, were deferred until 2021. So this was hugely beneficial to industry participants, and perhaps one of the strong drivers for the nice sales we saw in the fall to take advantage of those being able to write off 100%. So quite frankly, most of the business stimulus programs did focus on keeping employees on the payroll and off of unemployment. Our industry is at a bit of a disadvantage in that we use so many independent contractors. We think about your trainers, bloodstock agents, jockeys, consigners. So for those without employees, the economic injury disaster loans were primarily used to pay the bills. And those were from the SBA directly. The loans are paid back over 30 years with favorable interest rates. For those that had employees or generated net self-employment income, there were employee retention credits and sick leave credits if certain criteria were met. However, the most beneficial program by far was the PPP loan program. And that was a completely new program that was passed by the CARES Act, included in the CARES Act in March of 2020. And the loan is based on 2.5 times the average monthly payroll over a 12-month period. And the loan may be fully forgiven if spent on qualifying expenses. So qualifying expenses for this purpose included payroll, rent, utilities, and more recently expanded to include additional qualifying expenditures like HR, accounting, and costs for PP&E. So in addition, the PPP loans now include most 501c6 membership organizations, and are very beneficial to those who file Schedule F. Sole proprietors with Schedule Fs on their return may use gross income versus net self-employment income to obtain a PPP loan. There are some limitations with that. For instance, your gross receipts cannot be more than $100,000, or you cannot use more than $100,000 to get that PPP loan. But again, it's we've had some recent enhancements here, and there was even a second round of PPP loans for those who received the first round and had receipts declined by 25% or more from 2020 through versus 2019, and that's calculated either on a quarterly or an annual basis. There is a requirement that you still have to certify that the current economic conditions make this loan request necessary to support ongoing operations. But the current PPP loan program runs through March 31st. So if you think you may qualify for either the original or the enhanced benefits, I'd recommend you check with your bank or your financial advisor.
There we go. A lot of good information there, Jen. And again, I encourage anyone, if they have more questions specific to impact on taxes or those stimulus benefits, that they ask and use that Q&A tab at the bottom, and we'll circle back to some of those issues. I want to ask about, shift gears a little bit and ask about budgets, and if most owners do a good job of tracking their expenses, keeping a close tab on a budget, how important that process is.
Sure. Well, I will just say I work with many across the country. I would say that some are more meticulous than others in setting and or sticking to a budget. And it's often easier to budget for expenses versus income in this industry, but we can use industry averages or medians to do some estimating on the income side too. So we generally do end up focusing on the expense side of the budget a bit more, not only for ongoing expenses, but also the cost to acquire assets like horses, equipment, et cetera, on an annual basis. So the important thing to understand here is that you've got both the upfront costs of acquiring horses, plus the whether it be a stud fee or or going and purchasing a horse, but also the ongoing maintenance costs too. And we use a wide range of what's reasonable when developing business plans for our clients. And I know Maggie and George will get into that a bit more from a specifics perspective. But there are still obviously many decisions to be made as it relates to insurance and the like. And so of course there will be outliers too. We do recommend tracking activity by horse, the income and loss if possible. And obviously we know some have large operations that's more difficult to do. But it's good to evaluate whether or not a specific horse or its progeny have continued to be successful over a period of time. And then I am realistic, obviously, that opportunities may present themselves, which may be outside the budget, but there may be a good business reason to pursue those. And for example, the potential to generate a substantial rate of return. So if you decide to go outside your budget, I certainly recommend having a good business reason to do so and making note of why you do that.
Talking about decisions and kind of how you run your business, talk just a little bit about the IRS rules and the difference in horse ownership as a business instead of a hobby.
Sure. So for tax purposes, hobby is a dirty word. It's sort of a heads I win, tails you lose scenario for the IRS. If my horse activity is deemed to be a hobby, then I have to pick up all of the income in my tax return, but I am not able to deduct any of the expenses that I incur while generating that income. So as this is a panel on the economics of racehorse ownership, a potential side benefit is the ability to reduce your taxes or cash out of pocket by utilizing tax incentives that are available to horse and farm owners. And if your activity is deemed a hobby, then this income tax benefit or cash savings goes away. So the IRS lists 9 factors in their regulations for determining whether or not an activity is a business versus a hobby. And these are very facts and circumstances based, and not one factor overrides the others. They focus on how the activity is conducted, how much time is spent, whether you've had success in other similar or dissimilar activities, the history of income or loss with the activity, and whether or not you rely on this income, for example. So based on our experience working with people around the country and the related IRS agents involved in these audits, we've seen where good business practices, clean records, being organized, separating your business versus personal activities are most helpful in an audit. And there is a 2 out of 7 year rule for that apply to these audits. And so if I generate a net profit in 2 out of 7 years, then the burden of proof shifts to the IRS. Otherwise, if I've not shown a profit in 2 out of 7 years, then I have the burden of proving that my horse activity is a business versus a hobby. And from a tax incentive perspective, most horse and farm owners qualify to use the cash method of accounting, which accelerates the ability to deduct losses or expenses sooner. So if, for example, when a stud fee becomes due and I pay it, I'm able to deduct that expense, even though that resulting foal may not generate income for me for the next 1 to 3 years. And then in addition, the 100% bonus that is available to many business owners, not just equine, not just horse and farm owners, but many business owners through 2022 has accelerated the tax losses that we claim by allowing a full write-off of the purchase price of most horse purchases, but even for assets like equipment, heavy vehicles, fencing, land improvements like roads and barns. So oftentimes it is difficult for horse and farm owners to report and show a tax profit for 2 out of 7 years. So we often evaluate whether or not there may be an unrealized economic profit in the horses or even the farm if the farm is using connection with the horse business.
Jen, really important information. I appreciate it. And I know it may not seem like the sexy, glamorous topics, but it's so important in terms of a successful operation for sure. I want to move to Sarah Reeves. And Sarah, with the track suspended during the pandemic, what have been some of the legal issues that have been involved in the decisions to suspend racing and perhaps even more importantly, to resume racing and get back on track.
Sure, happy to talk to that. Thank you for having me. I'm looking forward to learning something from everyone on the panel today. So obviously there are numerous legal issues with respect to both the decision to decide, do we suspend racing and then do we resume racing? And I'll touch on those a little bit briefly, starting with just what do we do when there's a pandemic. None of us have experienced it before. When and how do we suspend racing? So the legal issues really range from compliance with governmental restrictions that can range from CDC guidance all the way down to your local health department. And so ensuring that, when do we have to shut down? Should we shut down? Navigating contractual issues with vendors and sponsors. I think I've seen many legal seminars this year on force majeure paragraphs. I think probably more than we have in prior years. And that's trying to figure out, if we shut down, what other contractual obligations do we have? Can we get out of them? How much is it going to cost you? And along with that, obviously insurance. Do you have any insurance coverage that will be able to protect your operations and try to bridge that gap? Managing employees. Are we going to have to lay off employees? Can employees work from home? That's particularly hard in our business since, a lot of folks need to be on site. And how do you manage that? How do you make sure that employees stay safe? If you're having to do layoffs, do you have WARN Act obligations or other federal notice obligations that you need to let people know, how to apply for unemployment, for example, as well? So I think obviously that's just touching on a few things when you're looking at whether we can resume. And I think we did a great job as an industry of resuming racing before most other sports did. And that's sort of the silver lining in all of this. But obviously from a legal perspective, you're sort of running through, do we have COVID protocols? Are we going to have fans? And we're going to require masking or require social distancing, those sorts of protocols. Again, are our employees comfortable coming back to work? Do we have protocols in place? And are we coordinating with those local county health departments and state administrators and regulators, including, the state racing commissions, or how are we going to reorganize the racing calendar and allocate host dates, those sorts of things. So I think it's fair to say, and that 2020 was an unprecedented year of challenges, but I think also that brought with it opportunities. And I think we did a great job as an industry of embracing those opportunities. I've heard, the old Winston Churchill quote of "Don't let a good crisis go to waste." I think we did a great job of harnessing and doing what we could to weather the storm that we're still currently weathering. I saw one article that said that TV viewership of racing was up over 300%. I mean, think about that. That's pretty incredible. And, handle, I think All Sources handle was up in Q4 of last year. When you think about the number of races that didn't happen or were reallocated, that's pretty impressive. And I think it's pretty encouraging. I know it's encouraging to me, and I hope it's encouraging to everyone here. So if you're new to racing, I think the message is you've joined an innovative industry, and it's exciting. And even through a pandemic, I think we saw a lot of successes.
Pandemic times or not, some of the issues that you touched on are things that are constants, regardless, that owners have to be concerned about. You've got workman's comp, labor laws as far as backstretch workers, insurance. I do want to touch on insurance because I think that's a very common question a lot of new owners have. What are some of the types of equine insurance that are available to owners, and maybe the things that they should be considering in weighing those options?
Sure, and I could probably talk for a long time, as I'm sure the other panelists would as well, with equine insurance. I think we all know that horse racing is a risky business, and thoroughbreds are very fragile creatures. And so with that comes, do we need equine insurance? It's obviously one way to protect your valuable assets, your thoroughbreds. And it's a cost. I think, Jen was talking about the importance of a budget in your business plan. And I think it's a line item you need to think about and consider. So like any business too, obviously you want to have general liability insurance and other insurance, but I'm going to focus really on equine insurance here with this question. Obviously, there's a range of insurance, and you're going to have to consider your budget and how much you want to spend on insurance. So like people, horses can get life insurance, they can get health insurance. And as I said before, like with people, it's a way to allocate risk, right? So you can get a full mortality policy is probably where most folks start. And that's going to reimburse you for the agreed upon loss of the horse if the horse dies, is stolen, or is euthanized. Now, again, you want to think about and work with your broker to ensure that you're covered. Say if your horse is traveling, I think typically most policies will cover you if you're traveling, but if you're traveling by air, you want to make sure that that is something that is covered. And again, like with any insurance, if you have a big claim in one year, you're going to expect your deductibles to go up the next year. You can add major medical to a policy for your horses, and obviously that is going to cover you in the event the horse is injured. It generally covers sort of non-routine vet expenses up to a specified limit typically. And this can include anything from diagnostic expenses, surgery. If your horse becomes very ill and has to go to the clinic for a few days, those costs can add up, and so major medical is a good thing to consider. Now, if you don't want to purchase or spend the money to have a full medical, oftentimes people will add an endorsement. You usually see like a colic endorsement for emergency colic surgery is one common endorsement that you might see. Now, on the breeding side, there's additional considerations. So that can range from your mare or your stallion disability all the way to prospective full coverage. So if you have an older mare, for example, you might consider a prospective full policy to sort of cover your bases in the event, something happens during the pregnancy.
A very different topic, but perhaps maybe one of the more costly things that owners have to contend with, workers' comp. Talk a little about how it varies from state to state.
Sure, and I'll do a lawyer caveat that I don't do workers' comp work, and actually there are firms dedicated solely to workers' comp laws. First thing to note, I think, is that they apply for employees. So if you have employees, then workers' comp is going to apply to you. Unlike labor laws, workers' comp is a state scheme only, and so you have to look at every state in which you have operations and see what laws are going to apply to you. I will say that during the pandemic, some states did alter their laws in response to the pandemic. For example, here in Kentucky, the laws were changed so that if you're an employee and you contract COVID at work, your workers' comp benefits could pay out. So again, I think it's important to work with your administrator on the workers' comp side and make sure that you're keeping the right records and that you're sure you're doing everything right in every state in which you operate.
And this for both of you, for Jen and Sarah, if you could pick one thing that all owners should be doing from either an accounting or a legal perspective, what would it be? We'll start with you, Sarah.
Sure. It's hard to pick one thing. I think for me, it's pick a good team, have a good group of accounting and legal and business folks that you trust and that you listen to and that you follow their advice. Horse racing is a business like any other. And so I think, following what you do in your other successful businesses is always a good rule of thumb.
Sarah? Oh, sorry, Jen.
Well, I'll just piggyback on what Sarah said, and just really remember when you get in the horse business to apply the techniques that made you a successful business owner elsewhere to your horse business. Certainly, yes, you want to have fun and have a good time, and that all makes sense. And hopefully, we have jobs that we still can have fun at. But get in the business, treat it like a business. Know what you want to spend. Understand what you want to do, and don't be afraid to change your plans as you go along as lessons are learned.
I so appreciate both of you and the information. And once we circle back, especially toward the end, I encourage you to jump in with this because I know that there's going to be a lot more said about all these topics. Right now, we're going to shift gears a little bit and go to our owners. Next up will be George Bolton. But before, we're going to take just a moment to give a short shout out for one of our sponsors, Keeneland.
In 2020, everything changed. But we kept going. Because despite the challenges, we all share a commitment to the industry, to the community, to the horse, to come together when it matters most, as we always have, as we always will.
And I think I speak for everyone in eagerly anticipating the return of racing to Keeneland coming up in a very short time. I know we'll be shifting gears before too long, but speaking of shifting gears, George Bolton and Maggie Moss have been waiting very patiently. And George, I'm going to start with you. With the track suspended during the pandemic, it's had to be really tough. Talk a little about what it's been like as an owner to go through this and weather the storm of the pandemic.
Yeah, I just thought I'd start. I know we're on a Zoom call, but I know I was invited to talk about how we make money in horse racing, right? So I just want to tell everybody that the one thing I think we need to all think about is in this situation we're in is everybody's going to use the word team. And team is the only way you can take success in a business and enter it into this business. So again, we can help you with accountants, lawyers, agents, and trainers. And again, I picked great people to help me here, and we can show you in the next 40 minutes how to make money and have fun for free or make money and collect trophies with making money. And Maggie does it, I do it. And I think that's important to get straight is that we didn't enter horse racing to lose money and get a trophy. We entered horse racing and run it as a business. And we've actually made some money at it. And I'm scared to death every year. I'm going to regret saying that, but I have so far. So I just thought that was important that everybody knows that's why we love the fun, because we're actually having it for free. In terms of racing, I talk a lot, as you just found out, but I went to Oaklawn as the only owner for both the Rebel and the Arkansas Derby last year. And when you have glass behind you and you're in 5 inches of slop and it's March 13th or 14th in Oaklawn, and it looks like it's going to snow out, and the horses go by and it's you and one person from TVG, it looked and felt like the first scene of Saving Private Ryan. So it was nothing like fans and the fun and the yelling. It was just horses, jockeys talking to each other, and the sound of whips and the concussion of the noise hitting the glass behind me. So, it was a time I'll never forget. It wasn't the happiest time because racing's fun with your friends there. And remember, when I talk about racing, my whole family's had fun with me during this whole 30 years of being in the game. It's not just a tea time with 4 guys, right? I mean, my grandmother all the way to my little nieces and nephews have gotten to come. So, I just thought that was important. So last spring, was a very lonely time. I went to Del Mar 7 times with maybe 15 owners each time. It seats 38,000. So, it was a weird experience, but racing was great on TV and you could gamble on it. And one thing, just to wrap up on those days, when I won the Arkansas Derby with a really nice colt named Nadal last May 2nd, I had 67 texts and 20 of them were horse people. The other were Middlesex School, University of Virginia, Alex Brown and Sons, friends growing up, because the competition was ESPN reruns from Tom Brady's Super Bowl the year before versus a live race you could bet on. So actually betting on racing online and people that were not normally in horse racing did get involved at great ranges of ages. And I think the sport net benefits. Now we're going to get crowds back in much bigger than they probably ever were because we have a bunch of new, exciting fans. So I know that was a lot, but we're on Zoom. I want everybody to know we can make money here and have fun, guys. This is not I want to scare you here.
Well, and it was well said, George, because I know that for those of us covering it, it was the same experience. And I imagine even more so owners who often can't travel. I know Maggie's in that boat where we haven't necessarily always been able to be on track, but the one thing that's been wonderful about horse racing is the opportunity to be able to follow it and stay involved and stay connected even at a distance. And I think that was one of its strengths that came through, although we certainly missed the camaraderie and the opportunity to all be together. Circling back to your point, which is an excellent one about being successful and making a profit. And obviously, one of the challenges for anybody in this business would be figuring out or understanding how much it costs to actually own a horse. Can you talk about the costs and as specifically as you feel comfortable doing to have a horse, to maintain a horse in training? I know there's a lot of other costs involved, but let's just focus on the day-to-day having a horse in training at the racetrack and what those costs might be.
So, this brings me to the whole team approach. I had success early on because I partnered with successful people instead of doing it myself on horse ownership. And, that's the way we did things in the 1980s, 90s, 2000. It's about 2 wins a year at the track you're at to break even per horse is what we found out. So if you run for $50,000, you get 60% of it, then you got to pay 10% to the trainer, 10% to the jockey. So you get, your 45%. And again, it was about 2 of those to break even. And so it's another way to say, well, if you have 10 horses, you need to win 20 races, right? And again, that's why I keep saying a third of 3 horses is a lot smarter than 1 by yourself. And you can agonize with your partners when things aren't going well. You can blame someone else, of course. And when it is going well, you have the we fun, right? And again, that's why you see me owning Nadal 4 guys because it's a colt. If a colt gets hurt, it has to win a grade 1 to have value in the stallion barn. Fillies, they can be 50 cents on the dollar. So anyway, it's about 2 wins. It's about $50,000 a year to have a horse in training. I'd say to give you a round number. And again, trainers are $100 a day. Then you've got vet costs and transportation costs. And again, they don't go down and they come every month. So again, if you get too many horses too quickly and you're not doing well, you get sour on this whole thing. It could be very, very scary. You know what I mean? And again, don't do that. Just buy a third of 3 horses with a friend or 2, go a year, get all the bills, get all the fun, all the agony of no fun days too. And then you can open your wallet would be my advice. And again, the people that Gary's put together today, and I was lucky because my roommate at the University of Virginia was building a farm in Kentucky. Bill Farish's father was building Lane's End Farm. So I got in with people who did it right. They put me in well-bred horses to start that had already run a race. We took no risks there. And again, we started real small. So it's about 2 races per horse. And it's about $50,000 a year, I'd say. It's about the cost of keeping a horse in training. Is that enough on that? I mean,
No, that's great. That's perfect. And we will get into a few more of the specifics as we go too, and have some idea of like where to concern yourself as far as those costs are concerned beyond what it takes to make the profit. That's perfect. Maggie, I want to bring you into this. You've waited very patiently, and the same question basically as far as costs of ownership, how much it costs. You have a kind of a different type of operation in terms of the types of horses you've got, and especially maybe the emphasis on claiming horses as well as hopefully allowance and stakes horses too. But the cost breakdown for owning a horse for you.
Thank you, Keaton, and thank you to Gary and everyone that joined us today. I really appreciate everyone tuning in and hope that we can have everybody from A to Z that wants to get into horse ownership do it. I think that the costs are very reasonable depending on how you do it. I'm a sole practitioner. I don't take partners because I want control over the welfare and wellness of my horses. I find that the costs, particularly if you educate yourself and hire the right people, can be done with a lot less than 50,000 a year. The major costs as to trainers, depending on jurisdiction and where you are going to run anywhere from 65 to 150 a day. As far as vet expenses, in today's world with medication testing, I don't think your vet bills should ever be more than 100 to 200 a horse at the most a month. Anything higher than that, unless it's a medical emergency. Shipping, transportation could probably run anywhere from 2,000 to 3,000 a month, depending where you are shipping. So I think the whole economic, to be very specific, per horse, per month, can be done from anywhere from 2,000 to 3,000 a month. And that is not cutting corners. I don't think I cut corners. So economically, I think that you can get into it. And if run like a business with the right people, it's as affordable as one payment for your house mortgage.
Maggie, you touched on this, and I'm going to go back to George as well, because location certainly comes into play with this as to where you're running your horses, doesn't it? As to what the cost could be?
Yes, I think that location pays a big difference. I have participated just about in every state, Texas, California, New York, Iowa, Kentucky. I don't think I've missed many states. New York and California have been, for me, maybe twice as much as running in the Midwest because of the added expenses, New York in particularly. So yes, depending on where you run would make a big difference, the Midwest versus the East or West Coast.
And George, kind of along the same lines, but in a different manner, I know it's been said that it costs as much to maintain a $10,000 claiming horse as it does a graded stakes horse. Is that true? Do you think that that is true? Do the businesses back that up? And if so, why? I'm going to stop you, George. Go ahead and try to see if you can unmute yourself. There you go.
Sorry about that. You can hear me now?
Yep.
So, yeah, what I was saying was that, obviously it, in the business, when I gave that rough number, Maggie's totally right. I mean, some of the lower purse tracks, the trainers in lower cost states will be 65 a day, and some hotshot trainer in California, New York may be, 150 a day, and take a bigger percentage than 10% of the profit. So, everybody's different. But I think the most important thing is your cost can, with good horses, go up for good reason too. Meaning, I was very lucky to be a third owner of a horse named Curlin in 2007. And he went from a maiden horse when we bought him to a grade 1 winner, and our insurance bill went up, our transportation bill, because he flew to 6 different states to run. I think so. Obviously every bill went up, right? But also his income went up. So, again, and again, some of the races were very expensive to enter. Other ones like the Haskell, they paid us to go. It's called an invitational. So, again, that's a good problem to have. I gave you an average number of, 2 wins, 50 grand a horse. Again, have a partner or two that's already done it and had success. Hire an agent with a record, hire a trainer that wins a lot, go with people that win races. And again, use what Gary's got today. I mean, this is a great system, OwnerView, to use tools to pick your team. And again, if you read about the things Maggie's so successfully done, and hopefully some people like some of the things I've done, we've hired really, really good people that work really hard for us. And so when I get a trophy, I want to hand it to the groom and the trainer and the jockey a lot faster than I want to hold it. And obviously, what I try to do, and is that I look back on my career, is have a big sale. We had on Curlin in 07, My Miss Aurelia in 13, Lady Aurelia in 17, and Nadal last year, after he sadly hurt himself. Those sales made up for all my weaker horses. So, I do sell, when the market's right. And I think that's important too. So not only can my costs go up, but in this case of Curlin, my insurance bill was going to be more than he could earn the next year. So it was the right thing to sell it, as strange as that sounds. So sometimes there's someone else who can take that trophy away from me and the price is totally right. And that's what it was there. So, again, these are moving numbers, but I think 2 races, 50 grand is probably average. And, obviously a lot of people make money if they run it right.
Well said. Maggie, George touched on this with day rate, and I want to go just a little bit farther into that topic with day rate being the amount of money that's paid to a trainer, basically to train the horse, and it covers some costs, but not all costs. And one of the costs that's also involved in the trainer's fee is usually a percentage of the earnings that would go to the trainer. And it does vary. I'm wondering if that is something that's negotiable. Is that something that you talk to with the trainer and go through and what that can average or how that's determined and how much or how little that might be on top of what the normal day rate is?
I think, good point. And I think it's very important to say here that I don't know how many years or where I started, but it's been a long time. And I think it's important to say for anybody that wants to get into racing, as to those discussions, as to everything, is education. Surround yourself with really good people, word of mouth. My successes and failures have been based on, like any other business, a doctor, a lawyer, accountant, everything is the type of people that I have been lucky enough to employ. The communication, you want to be able to communicate with whomever you're working with, as you would a husband or a wife or a best friend. You want someone that will talk to you about live animals. So yes, all of those things are maybe not negotiable, but there's a big difference. I've had trainers that charge 12% and stakes bonuses and win bonuses. I've had trainers that only charge 10%, not only charge 10%, but take 10% for a win, or 12%, 10% for second or third. It varies again, depending. I think the relationship that you have is so important, and the people you pick, and that negotiation as to cost. Yes, commission, yes, welfare, yes, that communication has to be open. So yes, everything is, like every other business, negotiable.
Sorry, I know this is an important topic to you, and I know to George as well. And I do want to make sure we have enough time for both some question and answers, and we've got some tidbits off of the OwnerView site that are going to be very helpful as well. But before we move on, I have to ask about aftercare and what you feel the responsibility is as an owner, and what you do to try to give attention to aftercare. What do you feel is the obligation or your responsibility?
It's probably why I'm in racing, is the horse and the love for the horse, realizing that a lot of people may not have kind of the almost demented passion I have for the animal, but they may have it as a business or a hobby or to drink. But aftercare, not everything we do, everything everyone on this panel does goes away without the horse. So I have found, and it has been 100% correct, if I take care of my horses, they're going to take care of me. So it's that simple. You don't take care of your horses, you don't give back to the industry or the horses. I don't think you'll be rewarded. If you do that, you'll be rewarded in great dividends. The horses will perform better. You'll feel better. And I happen to believe aftercare, taking care of your horses, keeping track of your horses, fighting for aftercare, giving to aftercare, for me is number one.
George, I imagine in all fairness that you feel the same way.
Well, I mean, it's kind of sad, but the first time I was called Mr. Bolton at the age of 57, this was about 10 years ago, was a girl at a school who I'd given a $900,000 to that had been gelded. So my business, I'm not trying to be a hotshot or funny, but it is the truth. I've given all my horses to schools to put into riding programs versus put them in claiming races and risk going to somebody who'd overrun them. Most of the horses, can handle that kind of life. And I have 3 or 4 that are outside of, rider horses that, go with a horse to the gate, that love the racetrack. So I actually spend a lot of time on naming my horses and a lot of time on where they end their lives. And again, if I can make a stallion, fantastic. It's very hard to do. A lot of expensive geldings are at schools, and it makes me feel good. Everybody wins, and the school has some really good looking horses. They can't run fast.
There's a home and a place for every horse. That is for sure. We have so many questions that I want to make sure we have enough time at the end to that. So we're going to move right on to a little bit from the ownerview.com section. And I do encourage anyone who is interested to really pursue that and take a look at that site, ownerview.com. There is a section titled Ownership that breaks down the costs of owning a racehorse. And we're going to take just a couple of minutes to review the section. You can see it at the top that if you just go to that ownership section, you'll come to this where it breaks down the annual cost per horse in training, average expenses, total, and it's broken down by region, Northeast, Southwest, West. Northeast, you can see at 50,000 as compared to, and here's where we talked about the differences in costs. The West is at 39,396. And though it's not a lot different, it certainly makes it different in the long run as to the possibility of making a profit. Midwest is an average $37,073, all the way down to Central Mountain, 24,656 as the lowest average expense for the annual cost per horse in training. There's also another really useful section on OwnerView that's for new owners, and that includes question and answers. You can see this is more of the itemized breakdown of the ownership costs averaged out. Trainers fees, we mentioned 23,000, a little over 23,000. Now vet costs can vary greatly, obviously. This is an average, but I would say it's a very general statement of $5,338 estimated cost in vet expenses. They can run much higher than that. Stall fees, most tracks don't charge stall fees, but there are certain locations that do. So again, this is going to vary greatly depending on location. And for some who actually stable off-site, it can be even much greater than that. Travel for trainers can sometimes be incorporated if you have a horse fortunate enough that would be able to travel or warrant traveling. $2,000 average costs. You see, move into feed supplements, that's over and above. Blacksmith, the shoeing costs about $1,450 average costs. Expenses of race day, and then layups for the time that the horse isn't at the track have to be factored into the average costs of owning a racehorse. All of these just averages and things to think about as you're kind of putting together your budget and determining how much you're willing to invest. There's the other section I mentioned that's for new owners. And it does include a section for an owner when interviewing a trainer or racing syndicate. And it can be very different depending on whether you're going the direction that Maggie did as to being independent or private, or you're looking to get involved with a racing syndicate. We can go over a few of those questions and then I'll ask the panelists if they have anything to add, but you can see how often do you communicate with your owners being a really important thing to address. How often you communicate then what the standard day rate is. We touched on that. Other questions, what do you charge for a percentage of earnings? That we touched on with Maggie as something that maybe could be negotiated. Enlisting services of a vet for the day-to-day management of horses in your care. How do you do that? What does that look like? That percent of ownership options would be relative to racing syndicate. If you're looking to get involved in a different way, maybe in a smaller portion, what percent ownership options are offered is really going to be a key question to ask before getting involved. what expenses, if any, are covered by the initial investment. And these can vary greatly depending on how the syndicate is structured. So they're very important to really consider and make sure it is in parallel with what your style is, as far as what expenses, if any, are covered by the initial investment. I know an important question as well has to do with the end, after the horse's time is done on the racetrack, what retirement plans are in place. Things like billing, frequency of purse distributions, and even providing references. Mention how often do you communicate with your owners? What is the normal means of communication? I think that this is the biggest question that I've had from fans who are looking to get into ownership, is how they're able to communicate with their trainers. That's not just for syndicates, but definitely for owners that are going just one-on-one with trainers as well. There's a lot of confusion, and there's also a lot of differences depending on what trainer you're working with. But it would seem, and I'll bring Maggie and George back into this, as Maggie, one of the more important questions to ask, because it can't be a very satisfying experience if right off the bat there is miscommunication.
I can't stress enough to anyone that you all can get into horse ownership at whatever way you decide. It is not strictly as perceived sometimes that it's unaffordable. Again, those questions are wonderful. The education and finding the right fit. I actually talk to my trainer every single day. Our communication is that we discuss the horses every day. I think that's by phone, not by text. And that was a good fit for me because I want to know, I'm very hands-on. As far as communication, again, if you're hiring Jen, or you're hiring Sarah, or you're hiring a trainer, or you're hiring a doctor, do the research, ask around, find somebody that's going to be your friend, that you can trust, that's loyal to you, all the other things you don't want to do in any business, and find that match. And that will be probably about 75% of your success in that type of unity.
And George, I know you spoke to teamwork and the team that you surround with. So I'm sure that communication throughout the team has been very important for you as well.
Well, yeah, I mean, I want to state, everybody can get into this sport in any way now. Okay. In the old days, you didn't have partnerships and syndicates. You had a bunch of wealthy people who had their own trainers on their own farms, and just watch Secretariat. You can see it wasn't like today. Today, you can be in Churchill Downs, sing for very little capital. You could be in a syndicate, which, as Caden said, could mark a horse up. So just check your accounting there. But that doesn't mean it isn't a brilliant move to learn about vet bills, training bills, transportation bills, what goes right, what goes wrong on this. What I keep recommending, kind of this first year of learning it all before you write a bigger check. And, again, the great thing is all these things are available, and all of them are fairly published in the Blood Horse Daily. They write this stuff up every day. Who's winning races, what's happening here and there, little vet ideas, that are good for horses. I mean, lots of things that kind of can bone you up as a person, in the sport. And remember, the race is a minute, 2 minutes, but the life on the backside with your trainer and your horses, with your foals and your mares in Kentucky, lucky enough to have a stallion to go visit him and think about the great times you had. We didn't touch on all the fun we've had, and again, today was about, making money at it. And Maggie is so right. These people that are leading are hireable, and this conference and Gary Falter can help you get to anybody you want to get to. And again, if a guy's full and he doesn't want any new clients, that's fine, but that's probably a rarity. And most people will welcome a new client and a new partner. And again, our only advice is go slow until you find which niche you want to be in. And again, you're going to have tons of fun, whether you put up $500 or $50,000. it's key. The key is to give yourself a chance to make money and have the fun for free, right?
Very well said. We are going to move to our Q&A portion of the program. And as we do, as we're going through the questions, we want to pause just for a second and enjoy the following from Blood Horse, our Q&A sponsor.
There's no better way to follow thoroughbred racing, breeding, industry news, and more than with Blood Horse. Blood Horse Magazine, the industry's premier magazine and tablet, with feature stories, in-depth profiles, award-winning photojournalism, and the industry's top writers. Blood Horse Daily brings you news, race results, and more via an app or an email. Both are free. And bloodhorse.com is the thoroughbred industry's go-to site. No one covers thoroughbred racing, breeding, and our sport like Blood Horse. For more than 100 years, Blood Horse.
I believe Gary has been sifting through many questions and is going to help us with this process, Gary.
Yeah, thanks, Kate. And yes, thanks to everyone for all the questions. We do have a lot of questions. And if we do run over past 3 o'clock, apologize. We want to get to as many as we can. And if you have to drop off, we certainly understand. So here's a question for Jen. Jen, we've got 3 or 4 questions about the hobby law, how to avoid being considered as a hobby. And maybe you can add to that, how does this conference assist an owner if they are audited in showing the IRS that they're improving their education on ownership? So Jen, maybe you can take that first question.
Sure. Yeah. I mean, and I also want to clarify a couple of things too here. Sometimes people get hobby loss confused with the passive activity rules. And I really just addressed the hobby loss rules today, which, from a tax perspective, they eliminate the ability to recognize deductions. So, some best practices as it relates to hobby losses are make sure you separate your horse activities from your personal, potentially, insert a legal entity in there. Looking at ways in which you could generate profits. So George and Maggie both mentioned that, yes, absolutely, people do make money in this business. And I can walk through how you can make money and how you can be successful and how you have that one horse like Curlin that, erases all the losses beforehand. And that's certainly very rewarding and beneficial. So it's really just coming up with a plan on how you intend to make a profit based on what you're doing. And sometimes it's good to not just do one thing, maybe not just do racing, but do a little bit of racing and breeding or racing and pinhooking, because there are ways in which there's more opportunity for success in the industry. And so that's the hobby loss rules. That's what we talked about before. But there are also rules called the passive activity rules, and those aren't as detrimental as the hobby loss rules for tax purposes. Passive rules apply to businesses. So if your horse activity is deemed to be a business, then you look at, are you passive or are you active in the business? And there's 7 tests that the IRS has for this, but the primary test that's used by horse and farm owners is the 500-hour rule. So am I spending at least 500 hours a year on my horse-related activities? And this is just a timing issue. So if I have other passive income like rental income and I'm generating passive losses, so I'm not spending at least 500 hours, it doesn't really matter because I still can offset my passive losses from my horse activity against my passive income. But if I don't have other passive income, and for this purpose, investment income is not passive, then I've got to look to, am I spending at least 500 hours? And if I am, then I've got the ability to currently deduct those losses against other income of whatever type. You don't have to have other passive income. If I'm not spending at least 500 hours and I'm deemed to be a passive versus active participant, I don't lose those losses. They just carry forward and are suspended to be offset or used in future years when I sell the horses or when I have other passive income. So it's not it's not very detrimental. It just really affects the timing of the losses. And from what activities qualify for perspective, and that's sort of a lot of times we get into discussions with the IRS about what activities qualify. There's some good case law out there, but unfortunately there's some bad case law too. So qualifying time should include time spent obviously caring for the animals, going to the track to watch your horses run, going to the sales, preparing for the sales if you're on the breeding side, your mating decisions, things like that. If you're married, your and your spouse's time can be combined to meet the 500-hour rule. So, I just want to make sure that we understand there's two different concepts here. There's the hobby loss, which is hobby versus business. And then if you're deemed a business, you look at active versus passive. So, so that's sort of in a nutshell, again, a little bit about the difference between the two and, how hobby, you lose the ability to claim losses, but passive, it just affects the timing of the losses.
Okay, there's a question that has to do with insurance. My horse is insured for $25,000. If he's entered in a claiming race for $15,000, does my insurance coverage stay the same? Sarah, is that something you can answer?
Yeah, I can certainly try. I'm not sure I totally understand the question. I think you'd have to obviously look to the insurance policy and see exactly what it covered. It wasn't clear. I don't know if there was in the question, if it indicated what kind of insurance they had, or did I miss that?
No, it just says I'm insured for $25,000. If I drop my horse below that, will my coverage stay the same or be affected?
Yeah, I mean, again, you have to relate. Insurance is so tricky because you have to go back to the policy. Typically, I will say it's in the policy what the agreed upon value of the horse is. So that's typically what's going to govern.
Okay. Here's a question about trainers. Should owners have contracts with trainers? Who wants to take that?
Yeah, I never signed anything with anybody. But obviously some contracts are pushed on me out of Europe, but not in the United States. I haven't signed anything with an agent, or I've signed them with sales companies, but I just get the bill rate and I agree to it verbally, but that's what I've done so far. What about you, Maggie?
Well, I have a disadvantage of being a lawyer too, so I have never had a sales contract with a trainer in 20 years. I don't think it's enforceable, both as an owner and a lawyer. I don't find that is a standard in the industry, or would it be something that could even be enforceable?
Okay, here's a question on revenue. My understanding is total amount of revenue available to owners is a fraction of the cost of ownership. How do we deal with this? Good question.
Could you explain, Gary? I'm not sure. I don't know. Yeah. Maybe Sarah and Jen or George understand it, but
I think, Maggie, I think that and anyone else could chime in. I think that the idea is that with all the fees that are involved now in terms of generating purses, and that I think there's been a lot of talk, particularly in the last year, with more and more of the money being bet through simulcasting versus through directly, where the money is not necessarily all going toward purses, that the prize money available doesn't get much bigger, even as the costs of ownership go up. And so the costs aren't necessarily keeping sync with the pie that's available for you to be able to win. So from an owner's perspective, I'm curious if you agree with that too, if that is the case.
Well, I will say, believe it or not, it was 2020. I handled a case in Remington in Oklahoma that dealt with someone that had a gimmick pay or gimmick play, and it was a dead heat. And I had a 2-hour 101 on this entire topic. It was amazing to me, and it's way different area, but in other words, so the answer would be absolutely yes. I had to get educated on it, and I'm not a gambler. I don't gamble, so it was quite an education for me as to the ADWs, the tracks, what they're making, what they're bringing in, and what owners are getting paid. And the disparity is shocking, and it's wrong. And I'm hoping we can all fight with the added expenses that owners are now facing, which seem to escalate at the tracks, that can be fixed, but it's a real problem. So yes, real problem.
Okay, here is a trainer question. Do you select trainers based on their win percentages, or do other factors come into play? maybe George and Maggie.
Go ahead, George.
Well, I was just going to say that I think Maggie probably does the same thing. We hire the most successful guys in the region they train in, by and large. We hire trainers that use the best jockeys, so they're not on the other horse. And we like guys that have a lot of horses, so they don't keep a horse in that should be turned out and needs some time off, which is very, very important. I mean, I want my horses in a field 3 months a year minimum, not at the racetrack. So, all these relationships are important. And again, if you have fun in the sport the way I have, it not only takes you around the world, but takes you around the world with fun people. And so if you do lose the race, you're still having fun all the time around just losing the race. And again, that relationship, Maggie's so right, with a winning trainer, and a guy is successful, they're pickable, you can get access to them, and you can get with owners that already are with them. And again, that's probably the lowest risk way to go until you have the confidence to go out on your own, which is fun too. But I think that that's the way I see it. And again, I run my business break even on purse money and then have big asset values at the end of the year. You know what I mean? So I try to at least break even on my purses, but my hit is the equity value of my horses if they win graded stakes. So when I say horses,
I think
I add capital gains to my income off of racing. It's, but the whole picture, has to add purchases, sales to that. That's all I'm saying.
I think one of the biggest problems in racing is that question, Caton. I think that everybody generating towards the biggest trainers with the biggest winning percentages is a huge problem, not just for the racetracks, filling races, but for the handicappers, one of the most important parts of racing. It is not equalizing or filling the field. I do not want to go to the biggest or the most winning trainers. I want to give young trainers a shot. I want to go with the trainers. Winning is very important. I'm not underestimating it. My communication, and I highly advise other people's communication, is their care of the horse. Vet bills are a #1 issue. Sometimes with the bigger trainers, I think you have to have the trainers that diminish vet work. There's many variables. I will say that hiring a trainer for me is winning and being successful is important, but equally as important is your communication, the expenses, the care of the horse, and the ability to transmit and communicate to you what type of horse you own. Those would be the 5 variables I think are very important.
And Maggie, and correct me if I'm wrong about the statement, but though you've had a lot of different trainers over the years, you have had long-term relationships with many of your trainers as well. So that would be in spite of or regardless of what their winning percentage would be.
Yeah, I'm real big on loyalty and I'm a real loyal person. My relationships have been long-term. If I've left particular trainers, it might have been over vet bills or the care of the horses, but it also might have been that I didn't want to be in a particular jurisdiction, California or somewhere else. I really have found the perfect relationship in my trainer now, Tom Amos, and it makes me happy. It's fun, it's profitable. It doesn't mean that that'll work for everybody else, but finding that relationship is probably the thing that makes me the happiest as to the variables I talked about. But I do really want to give young trainers, a lot of good young trainers. I don't want them, out of the business because the bigger stables are taking over. So there's a lot of great young trainers out there that deserve a shot.
Okay, Maggie, Caton, we're running a little bit long. How about if we take one more question? There's a lot of questions we didn't get to. What I'd like to do is if you've submitted a question, I'll put them in a file and I'll circulate them around to the speakers, and hopefully we can get some answers to some other questions and email them to you if you've identified yourself on the system. So Why don't we do one more question and then we'll get things wrapped up. So here's one. Should racehorse investors operating like a business report their operations on a Schedule C or Schedule F on their 1040?
That is a very tax question. So if you're just racing only, I've seen it both ways, really, on Schedule C or Schedule F. It doesn't really matter. Now, I will say that training of a horse does qualify technically under a farming definition, so you can use Schedule F if you're actively involved. A lot of times we do see Schedule C for those racehorse owners that are more passive in nature. But breeding and training for sure go on Schedule F, and racing can either go on Schedule C or Schedule F.
Okay, Kate, and here's one more I'd like for the team to address on aftercare. I want to retire my horse soon and place him in an aftercare facility to start a second career. How do I start this process, and how do I know if a farm is certified to do a good job?
I'm afraid that's been my trial and error from the time I was sitting at my law firm and got a call that a horse of mine was at a kill sale. So merely if you want to retire a horse and you want to make sure you are never in the position that that horse meets a really tragic end, you cannot just give it to a friend. And actually you can give it to a school or a college, but you better know that. It's the biggest problem in the industry right now. Thoroughbred Aftercare Alliance, those facilities are accredited. They're listed on the TAA site. They're safe. But I think that too many people are saying, I'm going to give it to a friend, or I'm going to give it to a camp, or my trainer said he knows someone who'll take it as a riding horse. The kill business business is bigger than ever right now, the auction business. So do your research. I would love if Gary would put up or give someone my email. I can answer that. And it is one of the most important things, because horses are slipping poorly due to economics or just giving the horse away. Do your research, talk to the people, ask the right people in the industry who to give your horse to.
I can't echo those sentiments enough. And I will say too, the one thing that has helped, but also hurt, but has helped greatly in terms of the ability to at least keep tabs on horses for those who are involved, even fans who have favorite horses and who have the resources and want to make sure that horses who are on the track get what they deserve after their racing days are done, at least having the opportunity to be able to follow them and to attempt to make sure that they get a good soft landing when all is said and done is really, I think, the responsibility of everybody in the thoroughbred business, not just the owners. And as Maggie mentioned, Thoroughbred Aftercare Alliance is a great place to start if you own horses, to be able to have a set of facilities that can take the horse that are accredited. That is half the battle. So I know our time is done and we haven't scratched the surface, but I just want to thank the panelists so much for your time and insight. All of you have provided such great information, and I want to thank our sponsors, Keeneland especially, for sponsoring today's panel. Most of all, thanks to all owners who keep this business going. We don't get opportunity enough to talk about them or thank them, but they are the backbone of the industry. We greatly appreciate the time that's been taken to be online with us today. For all of you who've joined us, thank you so much as well. Next month's panel is going to be about finding your thoroughbred athletes, and we sure hope you can join us on April 6th. And until then, I'm hoping that everyone can be safe and healthy, and whether it's virtual or whether it's in person, that everybody gets to visit the Winner's Circle often, cash bets, and stay safe. Thank you so much, everyone.